and we have co-host with us. So she'll be hosting this event. She is none other than Pavanashri. She will be hosting the event with us. So she'll be asking questions to me, and I'll be answering questions.
Yes,
Thank you, Pavanashri Garu, for joining us live today. I think you're. Can you hear me or?
yes, I can hear you, sir. I can
Yeah,
hear you.
yeah. Okay, I can hear.
And yeah, thank you so much for giving an opportunity to have all my questions answered in this session. I was having these questions from long time, so I thought of asking it to expert and get it cleared. So today I got an opportunity for that. So thank you so much for that. So first of all, I would like to know
Voice is a little. It's not. The voice is not clear. Can you? It's baking actually. Yeah, it is
can you
audible. If you can use headset, that will be more convenient because the
okay. Yeah, sure. So, I create a long term investment strategy that aligns with my goals?
see when it comes to real estate investing strategies, there are multiple ways one can invest, like residential investing and residential properties investing, commercial properties investing, and industrial investing, and agriculture land, vacant land investing. And coming to these are all the ways, these are all platforms one can find a suitable strategy or way, and outcomes can be capital appreciation, or outcome can be cash flow, or outcome can be wealth accumulation, or any other goal that they can accomplish. So basically one can find either or goals first, and so then decide which way they want to invest, like is it through residential properties, like in residential if you go in deep, open plots, flats, and single stored buildings, and multi-family units, and etc. So these are all come under residential investing. And industrial, similarly commercial if you look at hospitals, hotels, lodges, and all that IT towers, and they come under commercial. So one must know what is that they are investing for, whether is it for cash flow, whether it is for appreciation, etc. So then they have to look at their funding part. Once they understand the goal, then funding. So whether they can go with so that again all depends on property and a person's credibility, because if they are going for bank loan or funding with the bank, then they need to have a very good property in place first. Means they should be able to find a property, then go for a funding part. So again funding, they should be able to have 30% down payment, sometimes maybe 50%, sometimes even 20%, depending on the properties cash flow potential, all that, and credit score, all that come in the funding part. So and before that they should be able to know the local market. So all this matter. So depending on that they can choose their strategy, and but they need to understand in depth, like analyzing a property also much more important when it comes to investing for cash flow, capital gains. So there are various factors that they need to consider. I think I have answered in a brief way. If they want to get more details about these strategies and platforms, returns on investment, etc., they need to consult me directly. So I have separate webinars going on for this kind of personalized consultation. They can get into the webinar, and they can I'll share the link in the description so that they can register for my webinars. Also they will be able to get one-to-one consultation for 30 minutes for free, and also they will be able to get community vip community access. So if you look at webinars, they are around worth 5,000. And if you look at this one-to-one consultation, around 5,000. Even this community access worth 10,000. So I'll be giving 20,000 worth bonuses for free. Whoever is watching this live is getting them for free. And along with that, they will be getting personalized consultancy. They'll be able to get all the insights, inputs, and make their investment on investing journey become more successful, make it successful. So that way this program helps them. So it is not just you invest in a property and forget for lifetime. People invest in a property and they forget. It is not like that. If you are able to invest in one property, you are able to also invest in second property. If I am able to drive one car, I will be able to drive another car. If I am able to repair one laptop, I am also able to repair second laptop, third laptop. Similarly, when you are able to invest in one property, you have potential to invest in another property. Because you are stuck with a one property, that means you are not able to get the right knowledge in this real estate. You are just going with a mindset that I will not be able to buy other properties. If I buy this property, this is done. So all that they think. So such beliefs can be also minimized. Yeah, thank you. I think I have given a brief about this.
Yes, it was a brief, and commercial. So that was very. Question is, are there that you can guide us on?
Actually, voice is not. I think some issue, some technical issue. Voice is breaking in between when you are asking questions.
I will. Can you hear me now? Is it
Yeah,
clear?
yeah, yeah. It is clear now. Sometimes it is clear,
So
but
are
when you are
there
asking
any
me question,
yeah. So are there any emerging opportunities that are there that you can guide us on?
see, we cannot be master of all the fields. We cannot, you or me or anyone cannot be an expert in all fields. Everybody has got their unique strength. Everybody is different from one another. So in real estate also, there are various strategies, ways, and multiple other strategies, multiple funding ways are involved in real estate. So one can find a suitable investment vehicle, and then funding strategy or property itself is a strategy. So there are multiple options. Like when it comes to residential investing, there are other platforms like rental property investing, capital gain properties, and so that way, if they have to go for open plots investment, they need to look at returns. If you want to more returns, they should go for open plots. Like more appreciation, I want. If you want more appreciation, then go for cities, the developing market. What we call, there are three types of market in real estate. One is emerging market, one is developing market, and the third is developed market. So if you want to gain, if you want to uh, get maximum high returns, then you need to invest in emerging markets. So it's not like you invest today and immediately you expect returns tomorrow. It is not like that. You should be able to wait for 10 years. If you look at banking system also, they will not give you loans for just for 1 year, 2 year. They will be charging if you are paying uh, if you are closing, means pre-closing charges. If you are going to foreclose the loan, you have charges, because they do not want to lose that uh, returns. So similarly, in real estate, so you should be able to identify that. So 1 year, 2 years, nothing will happen in 1 year, 2 years. If you look at banking industry, they will give loans for 5 years, personal loans, especially personal loans, 5 years, and 10 years, maybe other loans. But for 15 years, 20 years, 30 years, they will give you housing loan, because in that period only they will be able to get maximum returns, maximum cash flow, maximum returns, maximum appreciation for their investment, because they are giving you money, so they want maximum returns. So likewise, you should also look at similar pattern. Should be able to wait for 10 years, 15 years, or 20 years, but people are not patient. If you look at Warren Buffett, he was able to grow his wealth multifold because he has waited for 30 years. And he has also got certain criteria before investing in a property. He will write an agreement for himself. If he is going to invest in any company or market, so he'll be writing a agreement saying that he will stick to that investment for 10 years, and he will not break that commitment. So he has a separate agreement form. So if he is going to wait for 10 years, then he is going to invest in that property. If he is not interested to wait for 10 years, he will not invest. So he will not touch that investment till up until 10 years. So after 10 years, I don't know what he does, but so why 10 years? 10 years, the compound interest that you will be getting will work. Today itself, the compound interest will not work. You cannot force. There are strategies that I'll discuss in later, how one can increase returns, how one can get returns, how one can understand what are the actual ways one can get money from real estate. So that I'll be discussing in detail in my courses. So at present, what I'll tell is returns matter. So understanding returns is not just you buy a property, it is done. It is not like that. Many things involved. That is why we say it is a real estate is a investor's product. It is not a, you look at any builder, they are investors. They are not see, for investors to become successful, they need consumers, customers. For every investor or for any businessman, consumer is the base. Consumers or customers are the base. If the customers are not there, if you look at real estate, the customers can be home owners, the customers can be rental property owners. So rental property owners are one type of customers for real estate. Like living in a rental property are second type of customers. Means, so when one is investing, is it am I a consumer? Am I investor? When builder is selling, is actually is giving you property and is selling the property, is not just selling the property, is making a profit and reinvesting in some other property. So there are multiple things one must understand. Initially I used to get confused. What is this all real estate? I was eager, but I was not able to get right knowledge from right people. So I was just exploring, learning, and observing all that. So this will not happen with people who are joining my course. They will be able to ask me anything. So I'll be able to help them answer their questions, answer their, break their resistances, or etc. So that way, this program really helps them. So what I recommend is, this is what they get is just brief about real estate, not full complete knowledge about real estate. So this will not happen, because one person should be there to guide in any field. Thank you. Thank you, madam. See, first thing is for this is a very tough question and a big question also, but I'll make it very simple. I just want to make it simple. See, profit means returns. In real estate, what we say is profit can be cash flow, profit can be appreciation, profit can be your equity, I mean your net worth or assets that you are owning. But to increase all these returns, you should minimize your expenses. Expenses can be interest, expenses can be repair cost, expenses can be maintenance cost, expense can be debt. So these are all fixed expenses, variable expenses, all that come under expenses. So you need to decrease expenses, you need to increase profit. The gap in between is your returns. So to increase the returns or profit, you need to decrease the expenses. You should be aware about the expenses. As I told you, down payment is your own equity, mean capital. That is your capital that you are actually have control, I mean you are owner of. If you are borrowing money and you are paying interest, that is not your share, but it is adding to your equity. So you should be able to minimize the those expenses. Then your profit share will be more and your assets will be, I mean your net worth will be more. That means your returns are more. So you should be able to uh, you know um bridge this, means you should be able to calculate that. So there are again various things when it comes to analyzing these expenses and when analyzing, increasing returns. Sometimes people renovate a property to increase their equity, and they sometimes they refinance, sometimes they generally, if you look at the property, what is the rate today, the same rate will not be tomorrow. So again it is adding to his equity. So that means he should be able uh, to increase maximum returns. I recommend to invest in base, large base. The more the base, they will be able to increase. And how they can increase the base is by investing for less. So if you are investing for higher price, your cost price goes above. I mean, if you are able to invest in a lesser price properties, you will be able to increase your profits. If you are again already investing in already higher priced properties, you are actually decreasing your profits. So again, the cost price also matters in this, and the location of the property also matters. And you need to also diversify. Suppose people, they take full capital and they invest in one property, sometimes suddenly risk may arise. And if you are having 1 cr, take 25 lakhs, invest one part of the south part of the city, take 25 lakhs, invest in west part of the city, take 25 lakhs, invest in east parts of the city, take 25 lakhs, invest in some other part of the cities. If you are investing in one property, that property may not give returns as you are expecting. If you are investing in four different properties and four different geographic locations, you may be investing in only open plots. It doesn't matter. But you need to diversify geographically. Strategically, you're investing in only focusing on open plots. So focusing can be in one platform, that can be residential only. You are sticking to open plots, doesn't matter. But to increase returns, you need to diversify your returns geographically. So this again increases your returns and it will add to your equity. So that is what I have observed in real estate. Even rich people, they do that. And again, they need to look at the market condition. So which part of the city, which part of the market is doing well, and which part of the city is suitable for investment properties, and many things matter a lot. I think I have done.
An effective real estate investment.
See, when it comes to real estate, location is everything. Location decides the price. But before that, the time plays a crucial role, and a very important role, the time as in real estate investing. So time, one should know when to buy, when to hold, when to exit, I mean when to sell. Some people they buy when it is time to sell. Some people sell property when it is time to buy. So these people, do the reverse game. So these people will not make money. So timing is everything. The time has cost. The property itself is a stable and fixed. It's not changing its color. It's not changing its place. It is fixed. But what is changing is time. Because of the time, the rate is increasing,
Increasing.
because there are again various factors like inflation, population, demand, supply, and many other things. And banking system also has a huge role in it. Like when the interest rates are low, when in the interest rates are high, the demand supply again has different impact. So likewise, many other things come into play. So, as you asked me, time is the most important valuable asset one has. If you have not taken a right decision at the right time, it has got opportunity cost. Since you missed to make a decision, it has got cost. Suppose you go to hospital, if you are not able to make that decision in that point of time, you have to bear that cost. That can be your health or can be anything. So similarly, when it comes to real estate investing, timing is main thing. People who invested in the right time, in the right place, they will win. They know how to exit well. Some people they keep, they like feel like it is my thing only. It is my property. But with that property, if we removes that feeling, that emotion, like it is my property, if he removes that feeling, he can increase. Suppose he has some property in high tech city, suppose 200 square yards, so which may be costing around 4 cr. He can sell the property right away, and he can buy some agriculture land, some open plots, and some other properties, many other things he can do with 4 cr. If he is owning 4 cr property in high-tech city as on today, he will not generate any returns. He will be able to get returns, but not as expected as if we diversify that. If we So again, these are all the things. That is why I say think like an investor. Where you need to invest, when to buy, when to sell, when to hold. If you are owning again same 300 square yard, you will not be able to generate anything. You just sell the property. I'm not stressing them to sell it right away, but think in that way, so that they can have same 300 square yards in other place and increase the returns. They can make this 4 cr into 440 cr. How? By just exiting from that property and re entering into some other location. So this geographical thing, many people will not talk about this. So timing, yeah.
Timing is all important. it's very important. Where we are, the location, and is very important. So, how does the rental market fare in terms of demand and rental rates?
See, everything depends on supply and demand. The people, if there is no sufficient land, if there is no sufficient rental properties available in the market, the rents will go up. Similarly, if you look at India's population, earlier China was topping the population. The number one country in the population was China. Now, the population of India is number one. It has beaten China. So, if you look at the land, India's land is, you know, you already know what I'm talking about. The land is very limited. It is not, created. So it is fixed. But population is increasing every day. Since the population needs shelter, so again that also impacts the rates. So for it can be rental, it can be property prices, etc. So that is why the supply demand is base for any business, but it more visible. It has more what feeling with the land. You can directly see population is not growing. Sorry, population is growing, land is not growing. Because of that, prices are going up. Like you have a in what Ganapati time, laddu is one, and people of that colony they want to have that laddu, so they will be auctioning that. I want to own that for some amount. Some second person comes, I want to give some thousands more, so I want to own that. And third person comes, no, I will give you more than these two people and give me this laddu. And fourth person comes. So similarly, land is limited, so there are people they need it, so they want to pay more price because they can be able to afford. They have multiple other things they are planning for, maybe returns, maybe children's, maybe they want to give land or property as a gift to their children, or many other things. So likewise, this rates are volatile and they keep increasing when it comes to real estate investing because of the population.
It was very much information and very information. Foods, if I can make investment, it will make a huge difference for me. So thank you so much for answering all the questions. And
Special thanks, yeah, special thanks to
that's what I
you.
want to
I'm not
mention.
able to hear
Thank you.
voice, but yeah, I think did I disturb you? Did I interrupt you? No. I'm sorry. Yeah. So I'll be sharing the webinars registration link. They can unlock bonuses. As I told you, VIP community access, one-to-one consultation, and webinars. So all that I am going to share the link in the description. They can join with the link today, and they can unlock the bonuses and gain insights of real estate and grow their wealth. Thank you so much for joining us in the live session, madam. We'll reconnect tomorrow. Thank you so much. Yeah, thank you. Thank you, madam. You can, yeah.